We're living the dream. How are you?
Good, good.
Good. All right, everybody. Well, thank you for joining us today on a day in the life of an asset manager, of the asset manager, I guess I should say. So thanks for joining us. We know that, there's a lot of people that have been traveling over this weekend and a lot of things going on in life. And so we appreciate you carving out some time to have a conversation and see what's going on. So we're going to go ahead and kick it off with some stuff from Cindy, and then we'll get rolling.
We want to remind everyone, like we're on Facebook until the 1st of March. So this is still going to be on Facebook. People will be able to watch it. But after that, you will have to go and register and get the Zoom link. Also, all of the webinars that we're doing every Monday will be uploaded to the website. So if you aren't able to make it on Monday, don't worry. We want to make sure that you get the information so you'll be able to go onto the website. And we're going to try our utmost to have a header on them so you'll know what it's about. And um, I'm looking because I can turn on captions.
Oh, I can grab caption after the fact. Don't worry about it.
Okay. All right,
Yep.
then I won't worry about it. All right, so let's get started.
Ooh,
So
one
today,
question before we
uh-huh.
get started. Is anybody going to Best Ever in Salt Lake
Oh,
City
yes.
next week? No? All right.
Um,
We're going to Best Ever. So if you were going to be there, I was going to say, make sure we link up. Oh, Brandy's going.
that would be great. We want to make sure that now I'm going to be honest with you. We've been in the multifamily space, and this is our first time going to Best Ever. So, there's lots of conferences to choose from. We've never been to this one, so we will actually give you some honest feedback when we get back.
Yep.
But it's not a singular ecosystem. So for example, like UP is for the RE Mentor, those are RE Mentor, or Peak is multifamily mindset. This is not any one ecosystem. So it's several people in the multifamily space, and they put this on. So we're just excited to go and check it out, see what it's like. We just got back from Race Fest, which is also one that is not a particular ecosystem. It is put on by Hunter Thompson. So I guess if he's his own ecosystem, but what he does is capital raising. And so it was all about capital raising. Um, and so that we're just trying to always learning. We're always learning. We've been doing this 7 years and we're just continually learning and felt like we really needed to get some good instruction on capital raising. But today we're going to talk about asset management and like what it really is and how it determines your profits. So first off, I just want to say it is a myth that if you think, we're gonna buy a good deal and it's gonna work, that's a myth. Because just buying a deal that pencils out does not mean that it's going to work. You have multiple, um, factors in this. And Tyler's gonna talk to you a little bit about those, and I'm gonna mute myself and cough.
Yeah, so I just wanted to talk to people real quick, kind of about a little bit of the research that we try to do, super, super high level right before we take a look at a deal. So we do have a couple of tools that we use pretty much every single time that we start to underwrite a deal. And now I just want to remind everybody that tools are exactly that, right? They are a tool. So this is not going to be anything that is going to do everything for you. I always tell people like don't go to Home Depot, buy a hammer, and then tell that hammer like, hey, tomorrow build a house for me. Otherwise, so it's only as good as you use it. So I'll actually share my screen and show you guys a couple of the tools that we use and kind of what we look for with those and the reasoning behind them. So The first tool that we typically use, and again, this just kind of gives us like a very quick snapshot of what's going on. So this is not a paid sponsorship, by the way. So it's a company called RE Indicator. I don't know if you've ever heard of it or not, but it's a gentleman that has built this out. He takes a look at a ton of micro market data, information, emerging markets, all that stuff, and compiles it into something that actually makes sense and is easy to read and use. So, for example, so every time we look at a property, it drops a pin. So obviously we've looked in Tulsa quite a bit. Um, Now these colors are a little bit interesting because like D is blue, C is green, B is yellow, and A is like that orange color, right? So the reason that we look at these is when we're looking at a market, we want to very quickly tell, okay, how big is the zip code, right? So if we're looking at this apartment complex here, how big is this zip code? What all does it entail? And then what are the surrounding markets like on the outside of it? And again, this is just to give you like a really quick flyover of what this would look like. So don't take it at face or take it at face value. Don't take it everything for this is gospel, right? Especially I lived in the Tulsa area. I know what this Tulsa area is like. This is fairly accurate. There are some inconsistencies, but again, it gives you a snapshot.
So
So what we
Tyler,
do,
I
oh,
want
go
to
ahead.
ask you a question on that. The black lines were the zip code, right?
Yeah, so
So,
that's
so the
something that,
black lines are the zip code area.
yep. So you can
Yeah.
turn
So,
on like zip codes and counties and things like that so that you can see a little bit more clear. But I'll come back to why looking at the zip code is important. But yes, this black outline around here is the zip code. So if we were looking at this, I would look at this and go, okay, cool. So there's a B neighborhood here, a C neighborhood here, a C neighborhood, and a D neighborhood. And then this gray area is there's not enough information to tell. So I'm kind of like not really sure what's going on with this neighborhood, to be honest with you. So what I would do is do a little bit more research. So the next thing that we typically use is something called NextBurb. So if you've never used this tool, it's all a comparison tool. So right here, you get a look at my zip code in the middle of nowhere in Utah, and it will tell you what's going on here. Most of it's blank because there's just not enough people. But I can compare that zip code to something that I know. That's the important part, right? So we have the zip code 74112. So I can drop that zip code in here, 74112. Today's not the day to be slow, computer. So this will tell you median home value in the zip code. So again, it's important to see size of zip code because sometimes a zip code is like, I don't know, almost 100 miles by 100 miles, and sometimes it's a couple blocks. So it'll tell you like median home value. It'll tell you the school rating in that zip code. There's a couple of things that we look at specifically in here, right? One of the things that we look for in here is education. And then this column over here is the US standard, by the way. So we want to see like a little bit more educated population, and it looks like just about average on all of these. Another thing we look at is unemployment rate and poverty rate, because that's going to be a big determining factor on whether there's like a lot of low income housing, like Section 8 LIHTC, if there's a huge poverty rate. So like in this zip code, there's actually a pretty high poverty rate. You can also see your main employers here. So like 15% of this zip code is employed by healthcare. So that could potentially be something that like, hey, if I'm interested in pursuing that, who is the healthcare that's employing all these people here? And can we talk to their HR about, we're buying this property, we want to get more healthcare employees in this property, right? We
now,
also
Tyler,
look
is
at,
this a
oh,
paid subscription? I'm sorry to interrupt you, but is this a
no,
paid subscription?
no, this is not a paid subscription. That's why that stupid ad keeps popping up and I keep closing it out. It's kind of annoying, but it's totally worth it.
But I just want everyone to know because RE Indicator is a paid for subscription, but NetSperb, all that information you get, that's free. So
Yep.
just make a note. I put it in the chat. So that's a free resource that you have. Okay.
Yes. Yeah, it's 100% free as of right now for what we're doing. And again, it gives you high level statistics of a zip code. Um, Gives you your breakdown. We typically look at people that make about 75,000 or more, because that's the type of people that we typically want to rent to. The 50 to 75 is like questionable in there, but you want people that can actually pay rent. And unfortunately, we're in a society now where you got to make over about 50 to 75,000 or more in order to just pay rent in your apartment complex. This is probably the number one thing that we look at, which is crime. And crime, so the national average, they put it at 100. So if you're like at 100%, the national average rate, this area is 2.14 times the national average. And that's a crazy stat. This is something we never want more than like 150, or we want it less than 150 ideally, but 150 at most. The cool thing about that is you can compare the crime in the zip code. So if you click on that button here, this gives you murders, assaults, robberies, all that fun stuff, and then it tells you here what property crime looks like in the area. So I actually looked at one this morning with someone that booked a call with me for underwriting, and it was like 106. So it's like just barely above the national average. And we looked at this, and violent crimes were like 50% of the national average. But their property crime was like 110%. And it's like, I can handle property crime, okay? What I can't handle is violent crime. So even like just looking at those stats, I'm like, hey, that's a fantastic area. Like the fact that they have almost no violent crime is amazing. This area has violent crime and property damage. I'm not doing any of that. So we look at that, and then this is the last part that we look at here very deeply, is home ownership versus renters. Okay. So on a national average, 65% of people own homes and 34% of people rent. Okay. If you're buying in a market, you probably want that number much closer in the 50s to home ownership and in the 40s to home renters. The reason that we want that is pretty self-explanatory, but guess who gets to say it anyways? I do. We want people to rent from us. And if they're buying homes, they're not going to rent from us. So my zip code is a prime example of like, hey, you want to buy an apartment complex in Tremonton, Utah? Well, guess what? Almost 80% of people buy their homes, which means that your pool that you can rent from is 22%, which is significantly smaller than the national average. And when you look at the fact that I live in a very small town, it's like nobody, and which would make it very hard to fill vacancies. So this area here, 44 and 56, those are really good numbers. The one that I was looking at today was like 45% home ownership and like 55% renters. And anytime that you're able to flip that balance, that's going to be really solid for you being able to rent your apartment complex. Tiffany.
Sorry, did I miss that? If you mentioned what was the minimum ratio of the home renters you look at?
I didn't really mention a minimum because it definitely depends on the size of population. So if you have like a gigantic populace like LA or something like that, even if you had like 60% home ownership and 40% renters, that is a ton of renters. But if you had like 90% renters and 10% home ownership, but the population of that zip code is 800 people, it doesn't matter. You're not going to be able to fill your apartment. So like even on the drastic swings, it's all a tool. This just gives you very high level oversight of kind of what's going on. What I typically look for is, yes, I typically look for home ownership at like 55 and less. But again, it doesn't tell you the whole story, right? Like I hate to give you something and then you're like, I'm going to say no to this deal because of this, and but really the deal works because the population size is different. Does that make sense? Okay, cool. And then the last thing that I wanted to show you guys is just Google, Google Earth, man. Have you guys ever looked at an apartment complex and dropped a pin and walked around, right? So I won't do that because most of you guys shook your head yes, and we want to keep these to like 20, 30 minutes, and I've already gone way over my portion. So one thing that I want you guys to remember is that Google Earth is your friend, right? Grab that little guy, drop him down, go walk around the neighborhoods surrounding the apartment complex. Don't just look at the apartment complex. Are there abandoned vehicles? Are there people who haven't cut their grass in, years or whatever? Like, are there homes that are boarded up? Like, is there anything sketchy going on? I literally walked around a apartment complex and there was a whole group of kids throwing gang signs. And then I looked at the violent crime in that area and it was over 200% the national average. And I was like, yeah, that checks out. Like, probably not for me, right? So like this Tulsa property that I was showing you guys here, obviously we didn't move forward with that one because the statistics are really bad. And we can tell whether a property is going to be a good investment, right? Because it's not all about the underwriting, like we were talking about. It's not all about the deal, right? It's about the community that you're buying into. Is this a good community? And if we elevate this apartment complex, is the community going to be better for it? And are they going to appreciate that elevation? Right? And so there's a lot that goes into it, not just pen to paper underwriting works, buy it. So that was the gist of all of those tools, right? So definitely use those tools because they are good tools, but also remember they're tools. The end.
The end. So I just want to talk, there are three pillars to asset management. One is your operation. So that's going to be, your who you hire as your property manager and kind of how you set them up. Our philosophy is always complex to community. So we're always focused on the operations of the complex, making it into a community. Everything we do is geared towards that. The second is our financials. Does it pencil out? Are we going to be able to make the money to pay the investors? Is this a deal that would be worth investing in? And then the third are people. And that's where we really are able to fulfill our complex to community. And it's kind of like Tyler said, when we go to a complex, we're not just going to look at the complex itself. We're going to drive the neighborhood. Sometimes, you have one maybe that's marginal, but it's in a neighborhood that's surrounded by houses. So that's a good thing because people want to feel like they're kind of living in a secluded area and not where there's a million complexes around them. So you have to look at all of these components, your operations, your financials, and your people. So so sometimes, that'll pencil out, but you got to think about, is this really going to work? You got to look at the crime, look at your demographics. Are we really going to be able to rent the units? Are we going to be able to fulfill our business plan? What actually are we hoping to do with our investors? Do we have a pref and what is that going to be? And then people. And then the last, just a little bit before we ask if you have any questions, when you purchase a complex, it is like a marriage. And I know that you guys have heard this from people, but I'm telling you, it is. And you are, either 5 years can be an eternity of heartache and you can't wait for the divorce, or 5 years can go by so fast and everyone works together. Our investors are happy. So you really want to make sure you vet your sponsors, you vet your partners. Super important because, like I said, 5 years can either be misery or it can be a very enjoyable process as you see things come to fruition. That's why I love asset management. I love seeing the complex to community. I love seeing that. I love going to the property and talking to the tenants, and people are saying, yeah, we didn't like it before, but we have new owners, new managers. They don't know I'm part of it. They just think I'm there with the office. I never tell them I'm an owner. I just say, oh, I'm here with the office, and I'll pick up a broom and sweep. I pick up trash. They just don't have any idea because I want to know, how do they feel about where they live? Because we want to make it the very, very best that it can be. So, do we have any questions? I hope you guys will use these tools. I hope it was beneficial, learning about what Nextberg, and definitely use your little guy, drop your little guy and have him walk around, because that gives you a really good place to start. Yeah, go ahead, Eugene.
How are you? Thank you for all this information. This is great. Thank you so much, guys. Just to piggyback on last week, right? Talking about underwriters and being able to tack on asset management for like very first deals. Is an asset manager like a full-time job? Or is it something that you can come back and forth to, like in like a monthly thing, a weekly thing? I'm not sure. Like wanted to get some details from you guys.
Please. So for me, it is a daily job, but I have multiple properties. So, it's kind of like, do I have one child or 10? Am I making one peanut butter jelly sandwich or am I making 10? So it kind of depends on how many assets you're managing. If you just have one, if it's your first one, you can definitely do it and still have a W-2 job or have something other for your income stream. But what it does take is I do meet every week with the property management company. So that's an hour. We also have an asset management team on every property, and I meet with them right after the property management meeting. These are people that have invested in the property as LPs, but they want to get behind the curtain. Like they want to just see, how does it really work? Because they're wanting to build their portfolio. So they actually volunteer. So it's usually 5 to 7 people, and we just create this asset management team. We come up with solutions, because trust me, I don't have it all up here. Like I need other ideas. Other people have life experience. And so we want everyone to bring their experience to the table. So that's 2 hours that I've committed in meetings. And then I get my reports, and that usually takes about an hour a week, like just looking through, where are we with the delinquencies? Where are we with new move-ins, our notice to vacates, understanding those reports. So I would say 3 hours a week, just for like meetings and prepping for meetings. Now, I would recommend you do your distributions quarterly. So that would mean every 3 months, you're probably going to have to devote a day, because you're going to want to work, your financials, how much do we have to distribute? And, we try to give you guys more information every week. And I know that we'll get to a point where we'll, show you, we have a scorecard that we use that help us to know how much is available. It's our net. So it's like after our it's our net income. We pay our debt service, we pay our reserve, we pay our asset management. And then we have what we call cash flow. And so every quarter we calculate that, and then we break it out to how much the investor gets based on how much they've invested. So that one might be a day. Might take a little while. I mean, the more you do it, obviously, the faster you are, the more systems you have in place. Like we have a checks and balance. So we have a spreadsheet that's just an Excel spreadsheet that tells us the number. Then we have the investor portal where, that's where it's actually going to come from. That gives us the amount. We always make sure those numbers are right before the button gets pushed to send, because if we don't match, I'm going to have to deal with it later, and I might as well deal with it now. So, it's a little bit more every quarter, but definitely something I think that you can do. I know we have taught asset management before as a course, And we will be teaching that again, but I'm going to tell you, it's going to be in 2026. Because 2025, we are focused on acquisitions. But when we get ready to run that course, we will make sure that you guys know about it, that it's available to you, because it's 12 weeks. And we give you everything you need. So just kind of file that away in the back of your mind. That might be something that you want to do for 2026. I think it'd be a great goal. I'd love to have you in class.
Perfect. Thank you so much. And just one last thing, is all this possible remotely?
Yes, absolutely. I live in Phoenix.
All right.
I don't own any properties in Phoenix. My properties are in Kentucky, Mississippi, and Texas.
Perfect.
So
Thank
what does
you.
that mean though? It means I do travel. So, but what I'll try and do is I'll group, when I go to Mississippi, I see all my Mississippi properties. When I go to Texas, I have two that are really close together. So I just try and make the most of my travel. And then that actually gets charged back to the property. So it doesn't come out of my pocket. But I don't make any money doing it. But I do get reimbursed, for my airfare and my hotel. So then the property reimburses you for that. So
Thank you so much, Cindy.
you're so welcome. Thank you guys so much for joining us. Just remember, you have to register. I think we have one more week that is going to be on Facebook.
No,
Nope, this is it.
This is the last
This is
one.
the last one on Facebook. So all you Facebook people that are watching the replay, please go and register. I'll make sure that when we share it, we'll put the link in there. But you want to make sure that you register for it, because otherwise you won't have access. So
So
we
our
don't want to, we
website,
don't want to miss anybody.
yeah, our website is hcmfllc.com. Make sure that you go on there, register for the day in the life. That's also where you can set up time if you want to chat one-on-one with Cindy, with me, with Lorik, who never says anything, or with Lynn, who you've never seen before. You can set up time to meet with us if you want to have a little bit deeper of a conversation, or if you want us to take a look at underwriting. I'm the guy that you would send that to. So it's definitely a good tool if you guys want to just take a look at our portfolio. It's on our website also. So feel free to do that, but definitely register if you haven't already.
Do you see Tiffany's message? Do you know how much our subscription for RE Mentor or RE Indicator is?
We bought it many, many years ago. The RE indicator, we bought it 7 years ago, and we paid
When he was
$50.
starting it, yeah,
Yeah,
we
so
we
it's
got in.
probably about 3,000 if I had to guess. But it's something that you pay for, and you only pay for it once. So it's not like,
That's not
it's a
true.
continual,
It's a subscription now.
oh, is it a subscription now? Well, then it
Yes.
won't be 3,000. That's good.
Yeah. No, and that's why Tiffany, when you said that, I said I'm not 100% sure. Here's the Facebook page. Go talk to the guy that his big brain actually built
Yeah.
this.
Mhm.
Because ours was, I mean, he was like basically a Kickstarter when we first talked to him and got in. So like what we did would be totally different than what he does now with new clients. So we're not 100% sure. We're all speaking way out of turn on that. If you want to know, just he's a good dude. Reach out to him.
He's a nerd.
He is a nerd.
That is not
Maybe
speaking
we may
out
be
of
able to
turn.
get a discount. We got to leverage the brand equity with the HCM team here.
You could always try.
Well, you can definitely tell us, because he knows me personally, and
Yep.
he knows I sing his praises all the time, because it's a great, great tool. So yeah, that's funny.
Thank you.
And sorry about that misinformation, but a nerd is true.
All right.
All
Well,
right,
that brings us
guys.
to the half hour. Thank you
Yep.
guys so much. If you could do us a favor and let's get more people here. Let's get more people interested in asset management and how to run properties and everything. We love seeing everybody's face, and we want this to grow even more. So we'll see you guys on the next one.
See you next
Thank
week.
you.
Bye.
Take care. Bye bye.
Bye.